I've used eToro to trade.
Okay, good morning. Welcome to Forex.Today, the YouTube community of almost 16,000 foreign exchange traders stationed around the world. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Guten Morgen. This is such a funny view. I should be back here. Let's see if I can adjust. Yeah, that's a little better. Hello? Can you still hear me? Yeah. Volume rocks. Now it probably doesn't rock. It's probably a million miles away. But anyways, this feels a little better. Otherwise, I'm just not so close, right? I mean... So it just feels funny that I'm so close. But what are you going to do, huh? So, hey, good to see you. My name is Wayne McDonald. I am a currency trader. Just like you. I like you. So, what are we going to talk about today? Technical analysis, fundamental analysis, with the overriding goal of teaching you how to put together trade plans. So, with trade plans, you can take control of your behavior in a otherwise chaotic market. You can control your behavior. Right? Then you can start to gain consistency because you're trading the same way over and over again. And therefore, once you start to see positive results, you have the confidence you need. That's why we put it together that way. So please ask questions. Please get involved. Please subscribe to Forex.Today. Please subscribe to Forex.Today. And what else? Oh, yeah, let's thank Traders Way. TradersWay.com. Thank you, Traders Way. You're a broker. They're a broker. You're a trader. Let's follow love. What do you want as a foreign exchange trader? When you pull the trigger, you want your trades to go into the interbanking system. Right? Right, FXCM? Right, Alpari? Oh, where'd they go? Right? You actually want your trades entered into the interbanking system. You don't want your broker trading against you. What else? You want your spreads to be reasonable. And almost always, even on things like, what was I looking at earlier? Like Kiwi Yen or something. And I was just looking at it, calculating, because I'm looking at it on a 1 minute. I'm like, what is the spread? Because the spread looked wide. And it was like 2.3 pips or something. And I was reminded, when I first started, that would have been a 12 pip spread in the best of times. So I'm just reminded of how lucky we are to have this mature market where spreads are so narrow. The other thing you need is execution speed. If you go with a broker that offers you super cheap spreads, and then you find out they're slow, it's because they're slipping you. So they promise you, you only pay 0.1 pips. But then every time you pull the trigger, you get slipped a pip and a half. So you end up paying 3 pips. But whatever, there's evil tricks. So you want fast execution speed. You want reasonable fees in the form of, if you have an ECN, you pay a commission. If you have a variable spread, you'll have most of the time a small spread. If you have a fixed spread, your spread's just slightly higher than a variable, but it never goes any higher than that. It's fixed. So if you're scalping around news, fixed spread is probably the way you want to go, right? So anyways, lots of choices. It's your way, the Trader's Way. With Trader Wayne. So thank you very much for being part of this community and your participation. Thank you for the hard work and professionalism that you put into Forex. One of the things I like about our YouTube channel is it's not all about hype, like go, trade, let's get rich. Look how much money I made on my cell phone today. Whoa, one of the things I like is that, we're adults. Okay. Can we talk about the stimulus? No, absolutely not. Forget it. The one thing we won't talk about today is the stimulus. Okay, we'll talk about that. Sure. Okay, cool. Once again, I think Trump knows game theory. I can tell you that. So, what would you expect to happen in a situation like this? A stimulus needs to happen. We weren't even going to talk about a stimulus, so that was kind of off the table. And then it came on the table again when Trump got COVID. Okay, so now you could just see, so now the Democratic Party you would think, it's logical, I'm not saying anything bad about them, but they would come out and say, okay, if we're going to do a stimulus package, you're going to feed everybody, right? Everybody's going to get some money. And they're going to say, okay, if you're going to do it, you got to do it our way. It's 2.2 trillion. They're like, 2.2? No, we're thinking 800B. And so, it becomes politicized, right? Well, if you're going to do it, you have to do it, and everyone thinks you're going to do it, so you're going to have to do it this way. You're going to have to fund everything that Republicans don't want to fund. And they're like, well, we don't want to do that. And they're like, well, if you want this to do, then you're going to have to do it our way. So the right thing to do in a negotiation like that is to say, okay, screw you, we'll do it later. We walk. It's the right thing. Okay? It's a line in the sand. Like if you remember Obama's, again, I'm not being political, I'm Canadian, So, like when Obama said to Syria, this is a line you don't cross, and they cross, and then nothing happens, now you've lost all your power. So Trump knows when to go ahead and say, you know what, leave, just walk away. Okay? Doesn't it hurt him? Why? Why does it change anything? You think now the Republicans are not going to vote for him? Now you think the Democrats or now they're going to do something? Like nothing's going to change. Nah. You kidding me? Nothing will change. And that's the interesting thing. Almost nothing ever changes. Okay? So anyways, we just move on. And we'll see. If they don't bring it back, if they don't bring the Republicans back to the table, then so be it. Okay. Now, so if anything, maybe Trump, like what did Trump say in his tweet last night? He said, "Well, elect me, and then I'll bring it. As soon as the election's over and I'm back in the White House, I'll pass something good." Yeah, Olin says it might be better for some because he's standing for something, right? Because I think people know it's a politicized process. Not bad. Again, I'm not saying this is good or bad or anything. But most people, like for example, thank you, Barry. It's like people that watch reality TV fully understand it's not reality, right? Every dating show is not really a dating show, and everybody knows it, but you still watch, right? So in this case, like everybody knows the system is politicized, and so getting dragged into a mediocre deal is just not, it's not helpful either, right? So if Trump wins, then he's going to be able to go in and do what he wants and do a deal that is good for the Republican Party and get him further power. Going into a mediocre deal and getting pushed around by the Democrats is not going to do anything. Thank you, Barry. Muchas gracias, señor. I'll put that in the cigar fund. You forgot to add the message. Yes, I do cook. Yeah, so anyways, right? So here's the thing, though. Going back to, like, the math. It's actually, in a negotiation, the right thing to do. Okay? If the tone is not set, if you don't maintain, if not power, at least order, then either no deal will ever get signed, or worst case scenario, a compromise is made, and usually that's not good, right? So, by the way, Harvard is very well known for their management program, and inside the management program, there's a negotiation program that is second to none, the best. If you want to learn how to negotiate, you go to Harvard. Like that, there's no opinion going on there. It is the best. Okay. Nobody talks about like, oh, Yale's negotiation program or Princeton's negotiation program. Harvard, right? Harvard runs the best negotiation program. And I forget his name. There's a very well-known guy. You see him on YouTube all the time now. He used to be a police officer, and he was part of my my negotiation program where we had to do hostage negotiations and stuff. Anyways, my point here is you don't compromise. You don't go into a mediocre outcome from the beginning. So you have to start the tone right. What's the guy's name? You'll see him all... Voss, there you go. Thank you, Johnny. Voss. Yeah, so Voss, Google him, and there's a lot of stuff. He's on Masterclass and a bunch of other things, but he does the hostage negotiation stuff. And it's really good. So the bottom line is the right thing to do in a situation where, daddy's in the hospital and someone else has been... Anyways, Trump comes back and he's like, out. Just walk. This is bull crap. What you guys are doing is lame. And just get out. Get out of the deal. And it's actually the right thing to do. Game theory wise. Now you might say, well, it does this, no, it does that, no, he's an idiot and all this. Fine, I'm not talking about that. What I'm talking about is what is the right move in a situation like that? Walk. If the Democrats feel like they have the power and they're going to push the scenario like, oh, you can have your stimulus package, but it's going to go down this way, then you say, piss off, and you walk. Because that's not a negotiation, that's a threat. There's a difference. So you're like, okay, we're not interested in doing a deal with you. We'll win the election, and then you're going to pay. So now they have to come back and say, okay, 2.2 is crazy. How about 1.4? Whatever. Okay. All right, so let's just move on. There's my thought on the stimulus package. It's love it or hate it. It was... As far as the game is considered, it's the right thing to do. Okay? Let me put it another way. This game is not repeating. Okay? So if you were doing like a prisoner's dilemma, or whatever game. Okay, if you're going to do a game once, okay? Or if you're going to do a game infinite amount of times, okay, your behavior changes. And if you do your game infinity -1, there's different rules. And you'll see it becomes through behavior. Right, so again, you can look at it through like behavioral finance or whatever. Your behavior changes as well based on your expected outcomes. And in this case, to Trump, the game is not infinite. Okay, there's this stimulus package, plus on top of that, you win the election or you don't win the election. Okay, so in this case, if there's only one and it's non-repeating. So, for example, if you're playing the prisoner's dilemma, where you either you snitch or you don't snitch, right? And there's no love for snitches, bitches, and witches. That actually came up in a family conversation the other day. Anyways, in a game where you don't know the other outcome, you'll never see the other person, you won't even know who the other person is, you will defect on them, you will snitch. You will defect because you will win. You have much more to win from snitching or defecting than you have to lose. If you know the person and you, like, if it's your boss, for example, you'll behave differently in a situation. Knowing that A, they're the boss, but B, you have to work with them over and over and over again. So there's two different things that might impact the way that you behave. One, they have authority over you. And B, you expect to play similar games in the future. So the way you play this game impacts the next game. Okay? So in this case, Trump is looking at it as this is a one-off game. Either he wins the election and they lose, which is another loss of, a form of loss of power in that case, or he loses and he's out and it didn't matter anyways, and at least he didn't get pushed around by Nancy Pelosi, right? So he's like, you know what? I'm president of the United States once, so screw you. And that really is the right thing to do. Okay? So whatever. You can do the math. And game theory is actually quite interesting because what you end up doing is a game tree, right? And it looks like this, and then there's this, and then this branch, could have like 3 from there, and this could have a dead end, and this could go here, and then this could go to a dead end, and right, and then you get probabilities and rewards associated with this. So this is an 8, and this is a 3, and this is a 1. So anyways, you start mapping all this out, and you can get to the logical conclusion which way you should play it. So if you're interested in that kind of stuff, game theory. All right, let's go back to our plan. What was the plan yesterday? You guys remember? I said what? Snitches get stitches. I actually said that. There's no love for witches, snitches, and bitches. I can't remember what I had to do, but I thought it was pretty funny. My wife looked at me like, So how many people remember this trade plan? And by the way, Barry, you popped 4 pounds on your question, so make sure you ask your question. Oh, what was the... Rita's book. Yeah, Voss's book. I just threw it away, actually. I just threw out like 50 books. Okay. Yeah, FT9 says, can we look at this as bears? Sure. First of all, market conditions are not favorable to a bear at the moment. That's the first thing. So if you force me to do it, I would still say, well, okay, there's no lower low here. There, thank you, Johnny. Yeah, actually he has a couple one, but yeah. So what did I say? I didn't say split the difference. I said, compromise, right? But, like this idea, like meet me halfway. Dude, you're not negotiating. You're right off the bat. You're okay. Oh, is that right, Barry? That's pretty funny. Yeah. Is that a lot of money to him, Barry? Or is it like nothing? Is it just, does he need it to work? Or is it just for fun? Yeah. All right, so if you were a bear, I already have this outlined for you. Okay? So it's a rule reversal. You're going to play this as a lower low. So actually, you got to move this. The interesting thing is, instead of doing the regression, why don't we do a pitchfork? Insert. Here it is. Yeah, see, this doesn't work. Yeah, I didn't think so. Yeah, that's the one. All right. He's a good goo. I guess we can't do blue because it's too much like the other study. So we can do deep pink. Nah. Well, I can't do crimson. All right, so let's do dark turquoise. Oh, that's terrible. And I can't see it. A little better, I suppose. Okay, so you might be looking like you want this to start moving down, is what I'm trying to show you. Then the next thing you would do is you would update your pivots to be bearish. And you'll see that we're in a sell zone. There it is. So you got a lot of assumption going on. But if you were going to do it, right? This, you would do it off this. It's so funny. It's such a like a complicated answer, but this is where we are now, right? So this is these are the lines you're playing. So it should be pretty easy for you. If you were a bear, that's what you'd be thinking. This guy went to one of my your conferences. Right on. Can you talk about the FOMC effect on the market with Trump's decision? I don't even understand the question, Joshua. sorry, buddy. What do you mean the FOMC effect with Trump's decision? I don't even understand. You got two subjects in your question. Oh, is that right, Mayday? You just got... Look at you guys buying Voss's stuff. Yeah. Now, you're starting my book club without me. Okay. So FT9 sold it the previous high on that's a poor trade, my friend. You sold here. I mean, I know you're profitable, but that's too early. That's too early. Okay. No insult intended, but that's just too early. That's a guess. Okay. Now, you might be saying, well, on this higher time frame or something, yeah, it's still too early in my opinion. Look at you guys, really seriously. You've read Voss's book twice? Yeah. You guys would like Harvard. You guys should go to Harvard. There's actually a program, man, I used to get their emails all the time. Harvard program on negotiation. PON, it's called? PON, I think. PON, yeah, PONharvard.edu. Here you go. So you don't have to be a full-time student. You could take like a negotiation program so you can actually, do something at Harvard, not actually have a Harvard degree, but you can take the program. Anyways, the program on negotiation, PON. You could do negotiation and leadership, Harvard negotiation masterclass. So where do you start this one? I think. Yeah, so I just threw out this book. This one. There's a book related to this. I just threw that out. I think I did. I think it was called Beyond Emotion or something. Anyways, la 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 la. So you can actually get like some sort of certificate. Here's like you can see like you can get a whole bunch of these classes put together for the less than the cost of one class at Harvard. Right? It's so right. It's cheap. Look at that. It's ridiculously cheap, and you get some pretty decent education. Okay. So this is where he learned negotiation, and now so some of his stuff is in here. At least he's in the program. Subramanian. I don't know these guys. These guys. Friedman. Jennifer Lerner. The Harvard Laboratory for Decision Science. Wow. She drives primarily on psychology, economics, and neuroscience to study human judgment and decision making. Wow. I mean, awesome stuff. I mean, no shot. Here's another guy. The bargaining stuff is very interesting. That comes out of game theory. So, like, yeah, so whatever. Oh, Shapiro. So Shapiro's another guy that you should Google. Here. So I studied a lot of his stuff too. If you're interested in Voss, you should also do Shapiro. And he's the one that does the emotional stuff. Highly evaluated course in negotiating at Harvard College, instructs psychology interns at Harvard Medical School, leads executive education on PON at the Harvard Law School, Harvard Kennedy School, Medical School. Anyways, do his stuff too. Stone maybe. Teaches the program, co-author best-selling books. Okay, so I think Stone and Shapiro have done things together. Gillian Todd. Uri, here's another one. Read his stuff. Okay. Okay, read his stuff. Who else? Don't know this guy. Anyways, yeah, read these guys. So yeah, so if you're interested in all that kind of stuff, negotiation, game theory, strategy, I mean, like, these guys are not just reading, I mean, these guys are doing lifelong research on, like, the way your mind makes decisions and a whole bunch of other things. As you can see, there's some very fabulously educated people here that are studying really, really interesting things. And as you can see, it has to do with, economics and law and politics. So the Kennedy School the K School focuses on politics. The B School on business. The economic school is different from finance because business is essentially finance. psychology, the medical school, like all these schools are coming together in this program. So imagine you're getting an education from a Harvard Law School, Harvard Kennedy School, Harvard Medical School, Harvard College, Harvard Business School, you know, so on and so forth, all wrapped in together. It's really fantastic. Okay? And so like Uri, for example, Shapiro, these guys are negotiating like the Middle East peace talks. So I think in one of Uri's books that I read, he was talking about how even just setting the environment for the negotiation, how important that is. And he said back in the, who was it? Bush Senior's Secretary of State, I forget who it was now. Anyways, they were going to negotiate a peace treaty with somebody in the Middle East. I can't remember who it was. And so they're like, okay, we're going to meet at this Air Force base in this hangar. And anyways, so under a B-2 bomber, they set up tables and chairs. Come in, let's negotiate. By the way, I got this bomber. I can come into supersonic and blow the hell out of your town. but let's talk. Just very interesting stories. Very, very interesting stories. Very, very interesting stories, in fact. And so Uri did a lot of Middle East negotiations and peace talks and stuff. And these are the guys that do it. They go out and do the peace talks. Okay? All right. Cool. So I hope you enjoy that. So, yeah, so right now, if you're thinking up, you're thinking this. If you're thinking down, your belief system is telling you, or your filter is telling you, that this is your resistance and that's where you look to sell. So I forgot now who, was it FT9 that sold here? And I'm like, that's too early. You're on the first touch, and that's a bit of a bet. When you buy at support or sell at resistance, and you're like, I bet you it's going to hold, it's dangerous. Now, it often works, but that doesn't necessarily make it right. So if you're betting that this is going to hold, I'd rather you be long here. Because there's always a pullback. You see this wick and that real body? There's a pullback in there. So I'd rather you kind of buy the pop, right? In this case, I don't want you to sell here. I want this to come down first and then sell the route, right? Sell it that way. No, I know you didn't really, right? I know you didn't. I'm making a lesson out of it, of course, FT9, but it's still, right? There's still a finesse that needs to be displayed. And it's I get it. With the psych level of 18, it's very much doable, but if you get this on a longer term trade, okay, you're going to get this. So another sort of message I'm not just giving you FT9 but everybody is that this is a step up and you're being terribly aggressive to sell a step up. What you want to sell is a step down because it's a technical indication of a lower high. So you don't want to sell a higher high, even if you're at resistance, and even if it's a roll reversal. I get all that. But if you're trading something that's going to fall for the next few days, the next few weeks, or whatever, you can afford to wait. Okay? And if this is a day trade, you're just a little bit aggressive, that's all. I mean, this has clearly made a higher high. So you don't sell higher highs, you sell lower highs. No, FT9's been around for a while. Oh yeah. So right, I'm saying there's some patience right. There may be aggressive is all I'm saying. I'm not saying it's wrong, but it's a bit aggressive. Yeah, no. FT9's fine. Okay. So I get the price, but I think the time is off. Okay? Okay. So remember, it's not the, you don't want to measure everything by a trade basis, because you get into situations where you sell it and you make money and then you're out and then you do something else. What I'd rather you do is start by confirming, if you're a bear, the trend, and then knowing, right, giving yourself permission to confirm these longer term moves so that you can be in it for longer. That you don't have to be on the first touch, because that's how that works, right? So you're at resistance, you're at price, you're at role reversal, whatever you want to call it. Everything's good there, but you don't have to be on that first touch. Okay. Okay. So I think if it rolls over now in New York, it'll be very interesting, because what we want to do by tomorrow, we need to pull this further down. So even another way to kind of make the same comment, just from a different point of view, if it was so bearish, tomorrow's pivot should be lower, right? We should be looking at this by now. And we're not. You see what I mean? So anyways, hope it works out for you. But I do. Aussie. So like this one is another example of being correct, but being dangerously early or dangerously aggressive. Okay, so I want to be a bull on this. Okay, so you know this, right? I'm a bull. Okay, cool. So you know I want to buy. The second thing is, this is my bullish buy zone. So I definitely want to buy somewhere in here. And this is my daily M3, and I definitely want to buy there. And I'm sure I could fib this and argue that it's a 50%. I could throw down a huge argument there for all kinds of things, right? It's early. Okay? It's early. Now, you can scalp in here for sure, eh? But you still have to recognize that you're right. Well, everything is good here. Okay? So it comes down to like a risk tolerance. I think the way you should look at this is, if you truly have a trend, and I want you to think about this, what I'm saying, okay? If you're truly trading a trend, so does that mean scalping? Does that mean spot trading? No, but all of those things tend to be better when you trade with a trend. So if you're right on this as a bull, and there's a trend, it's going to go up more than a day, right? It's going to be bullish for more than a day. Maybe a week, maybe a month, maybe a year, maybe a decade. But more than a day, for crying out loud, right? So therefore, you can trade this, but in the beginning, because we have a step down, I want you to trade it as a bull, because remember, this is a 50%, there's a roll reverse, there's a bunch of things going on here. So you can be a bull, but I want you to look at it and say, you recognize that you're early, you recognize that you're aggressive, and the way that you temper your enthusiasm is to go small and treat it like an intraday scalping spot type trade with maybe some conviction for holding it longer. So that's basically what FT9 did on the other pair to the downside. Okay? Where you're like, as a bull, this is pretty obvious. Okay? So you're long and strong. Okay? And then you can do it this way as well. I mean, you can change it off the 5-minute chart, and I can give you an hourly candle either way. Okay? And you're tiptoeing on this higher, but you know you're going to be challenged here. And until you breach that, technically, you're a bit early. Because technically, I wouldn't call this bullish until we're above this. Cool? So what you should be doing now is identifying this, and maybe New York comes up, and then tomorrow this comes down, and then tomorrow you buy it and you take it north. And after that, we have a confirmed, right, series of higher lows and a series of higher highs. Okay? So that's what I call by tip. When I say maybe you want to tiptoe into it. But I just wanted to make that point that right, like managing the risk and entering the trade with the risk in mind is important, or simply waiting a little bit, knowing that if this is going to be long, then you know it's going to be long for a while. You don't have to be the first one in. Aisha says, you mean it's too early to buy? No, it's, what I'm saying is there are multiple time frames. And with every time frame, there's a different risk associated with this. So looking at the move on this, so I'm looking at daily pivots. This is a buy zone up here. Well, we're clearly below the buy zone. And then the new buy zone is down here. So on sort of like medium term, this is not bullish. No matter what you want to argue, on the medium term, this ain't bullish. And I'm a bull. Okay? You understand? So does it mean you cannot buy? No, it means you're buying on the medium term something that is not in an uptrend. So you can buy it, but you're being aggressive because you're saying, oh, even though it's a downtrend, I'm right. Well, that sounds like a guess. I bet you I'm right. No one's interested in your bet. Okay? And if you are correct, it goes up. If you're basing that on some sort of technical analysis or fundamental analysis that would create a trend, it's going to be higher highs and higher lows on this chart, multiple higher highs and higher lows. Like the next chart will have the green up here, and the new buy zone will be higher. See, I'd rather you buy the higher buy zone than buying the drop in the buy zone, right? This is a step down. I'd rather you kind of get more confident when this happens. So in here, I'm isolating where we are now to be different from where we want to be in the future. And therefore, you can buy this. It's totally fine. But your mental reasoning or your emotional confidence should be different than buying up here. Okay? So therefore, you're scalping long in something that is technically currently a downtrend, and you're participating in turning this around to be an uptrend. That's cool. Just realize you're scalping against current market conditions. You can totally do that. But what a lot of people just do is they buy it here because it's an M2, and they're done. And they're like, yeah, I'm swing trading this. Well, I've never once said you should swing trade against the trend. That's not something I preach. right? So that can't be a swing trade if we're technically on this time frame at least, right? So I'm just looking at yesterday versus today. Now you might be looking on this, on weekly charts and say, "Oh, well, Wayne, you're crazy if you look at a weekly chart." Well, dude, I'm on a 5-minute chart. You're on a weekly chart. Obviously, there's not going to be congruency. But if you're right on your weekly chart, then I can wait for my 5-minute chart to find congruency, and then I can start trading. You see? So, if this is medium term down, then yes, you can scalp this long. Okay, and then once you get this chart to turn bullish, which means a higher higher low scenario, then now you can swing. So you can scalp and spot into your swing into your position, and your position into the lifestyle you want to live. Okay. Okay, so it's a multiple time frame analysis, and it shows you the difference between a position trade, a swing trade, right? A spot trade, let's say, and a scalp. Okay, this is probably a scalp. Okay, we're in here. This is like, it's more of a London Open spot trade. And then tomorrow, if we get that, that's going to be a swing trade. And then if you can maintain that for weeks or months, then it's a position trade. Okay. 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 So if this, okay, here's the conservative target for today. If Aussie dollar goes up to that spot today, this is going to rise to probably here, and these targets are going to rise up to here, and your trade plan for tomorrow will look like this. And the interesting thing is that could happen in New York, in Asia, or London Open. We don't know. That's why you got to do your job. Okay? But if you get this, it's a swing trade. Why is it a swing trade? Let me back out even further. Back to where we started. You have a bigger trade plan. What's your bigger trade plan? This, this, and this. Okay? That's my swing. Okay? So now, what I'm suggesting is on a sort of a day trade, spot trade scenario. If you buy this tomorrow at London Open, you're now in that trade. You're now in your swing trade, but you took it on a daily pivot. After we created a bounce near support, a higher high, higher low, buy the dip, not the drop. There's a difference. Buy the dip, not the drop. See the difference? This thing dropped. Okay? This thing dropped off the central pivot. That's exactly where a bear would sell it. And so it tanked. It dropped from 72 to 71. That's not a good buy until you have some confirmation. Okay? And now you're buying this dip, not this drop. Okay? Don't trade against the machine. So what you're really setting up now is this. Okay? But to do that, you got to look at it multiple time frames. Aren't the end pairs? I'm not talking about that on. I'm talking about this. I'm talking about technical analysis. Okay? So whether the dollar pairs are better than USD pair or yen pairs, I'm not. That's not what I'm discussing. And there isn't better ever. There's just different. Okay. Now I'd like to see a weak dollar. It makes sense to me. So, okay. This makes sense to me. This makes sense to me. Okay. Okay. So even on this hourly chart, you see how statistically speaking, it's still down? Wouldn't it be great if tomorrow my price action pivots were north and we were in a scenario like this? That's kind of what I'm saying here. I understand the buy, but I'd like market conditions to be different. I'd like the slope to be positive. All those things, okay? There's lots of little lessons in there. I hope it helps. So maybe, how do I do this? I'm going to create a highlight. Hang on. How far back do we go here? Let's see. A swing trade. A swing trade. It won't let me go back very far. This is not bullish. It's a first touch. Because that has been around. Now, it often works, but that doesn't necessarily make it right. So that's all I'm saying. I'm not saying it's wrong. But just a little bit. The next, everybody. I know you didn't really kind of back. You see, forward to sell it. All right. Okay, I'm going to do this. Okay. How to tiptoe into a new trade. New Forex trade. I have to put Forex in there. Okay. Just documented that. Cool. Neat. All right, what do you want me to cover next? Help me help you. FX Noob says short-term USD, the dip. Okay, here's what I mean. These are not dips. Those are drops. These are dips. You see the difference? Dip, 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 dip. Drop, drop, drop. Pound yen, pound yen, pound yen. Why everyone fixated on pound yen? All right. Guess we can look at it this way. No, I'm just looking at a way to set this up. How do I want to do this? I think what I'll do is I'll position trade here. swing trade here. And I'll day trade here. Okay. All right. This is my buy zone. So I'm a buyer between 134.50 and 137.50. Okay. The best price I wanted for the week, which we knew last week, by the way, I want you to make sure. I want to make sure you understand that. Last week we identified 183.88 is the perfect price inside here. So that's 135.88, right? 135 right here. Okay. So we knew this last week. And 2 weeks ago, we knew this buy zone was above us, which is actually a dangerous one, but because we're coming in bearish. That's why you got to wait for some sort of confirmation of higher high, higher low, like I just discussed. And that's what we got here. So now what you should do is day trade pound yen up this way. Now, this is not, again, because we've come below the day, it's not good. Okay? This is really bearish profit taking. So you have permission to be long this today, not far off our price here, 136.64. It's just not good. It's not a good trade yet. So let's look at this more closely. What would we like? Oh, that's better. Okay, so actually, I had to clean my chart up. That's better. Okay, so this is not good because of what I just told you. Can you scalp this long? Yes. Now, actually, tomorrow, we've already identified we want to be long at 136.50, and that's where we are now. So you have permission to engage around where we are now to as low as 136. So in the next 50 pips, you're allowed to engage if your overall plan for the rest of the month of October is this. Okay? You see that? If this is what you believe in, aka strategy, okay, and you already know our weekly buy zone is, I think it looked like something like this, right? So now inside of that, you will have the higher high, higher low, buy the dip. Okay? And you might say, oh, but Wayne, but dude, I'm a bull. So I don't look at it that way. I filter that out. Okay? If it's going to go up, we're going to buy it in the next 50 pips. That's that. Done deal. Okay? Now, if you're a bear, you're going to say, well, I want to sell this lower high. Good. Go for it. Have fun. Okay? And really, it's not this. It's above us is a monthly central, I think. Okay? And you're like, well, how do you decide which one? That's what fundamentals are for. That's why you do research. Okay? Okay? Cash doesn't like pound because of Brexit. Yeah, then you shouldn't trade this one. You see it? So you would be buying tomorrow's trade today. So here's tomorrow's zone. So you would try to buy that today, and then your stop goes below support. And that's your day trade. Okay? This is where bears would sell, and they're targeting down here. So one of these people are going to win. sellers up here or buyers down here. One of those groups are going to win. We don't know whom, but the thing is, if you constantly trade bullish trade plans and constantly only buy in bullish market conditions, more often than not, you'll make money. And even when you're wrong, you'll still make decent. You'll make some money, maybe not as much money as if you were right, but as long as you're buying at support and selling at resistance, you should be pretty reasonably okay. It's when you can't make decisions and you're doing stuff in the middle that's all gobbledygoo, you're going to have very inconsistent results. Is that right now? My mic is too loud? All right, that should make the difference. Meta, euro, pound. Oh, Maiden. Say it's not so. Okay. Thank you for your contribution to the cigar fund. All right. I don't even have it on my chart. Euro pound. I guess I have to make one. Do I even have it on here? Euro Aussie, Euro Aussie, Euro Noki, Euro Yen, Euro ZAR, Euro CAD, Euro Swissy. Okay. All right. I guess I have to do this one. Euro pound. So you're doing the Brexit play. Okay. Okay. Cool. So according to swing trading, this was your buy zone, and you're done for the week. And I don't know anything else. That's that. Actually, is that monthly? No, that's weekly. Yeah. Okay. I would expect this to continue up and then get played like a range. But right now, very, 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 very clear that the buyers of this are targeting that. Okay. I mean, that's it. So I don't know if you're a bull or a bear, but I'm just like, that's what that tells me. Okay. This is a double exit, so the bears are gone. And bulls are expecting to take that up here. This could very well hold. And like I said, we're essentially, whether we go this high or this high, I would expect that we're sort of range boundy. Okay. And that next week's pivots get pulled in. Okay. And these pivots move up to be the same as these. And then this gets pulled down to be this, in here. And we have the giant sucking sound of euro pound. Do I consider euros a safe haven? Absolutely not. It's the opposite of a safe haven. So give me one major safe haven. Give me one currency that's a major safe haven. Yen. Okay, so watch when the yen is strong. What does euro do? When yen gets strong, what happens to euro? Does it get strong or does it get weak? Then it's not a safe haven. Okay? It's literally money leaving that economy due to some sort of perceived risk. Not a safe haven. The United States dollar gets strong when there's a global perceived risk. They're like, oh my God, things are bad. I should buy US dollars. You see? That's what makes it a safe haven. When things are bad, people want to buy it. It's like a Geffen good. Do you guys know what a Geffen good is? A Geffen good. In economics and consumer theory, a Geffen good is a product that people consume more of as the price rises, or vice versa. It's the opposite of what you would think. Okay? So imagine, so it's a paradox, right? Typically you buy more of something as the price lowers, but as the price rises, you buy more of this. A Geffen good is a very unique good in economics. Okay. Geffen goods are named after Scottish economist Sir Robert Geffen, to whom Alfred Marshall attributed this idea in his book, The Principles of Economics, published in 1890. Okay? So imagine just this idea. Geffen proposed this paradox when he observed poor people during the Victorian era. Just the idea of studying poor people would have been crazy. It would have been crazy. They're like, you went out and you talked to poor people? It's funny, right? Okay, so anyways, the Great Famine of Ireland and whatever. So, so you can look at it. So imagine this is what I did for 4 years. This kind of crap. You're like, oh my God, look at the indifference curves. Right? Yeah, oh my God. I did enough of that. The slope of the indifference curve. Oh my God, did you see it? Okay. What's an example? For some reason, I'm thinking rice. Right? So when there's a food shortage, rice goes up in value, and therefore people buy it because they're afraid of it going up faster. Okay. Now, you have to look at inferior versus non-inferior goods, and oh my God. Ugh. It just makes me, I've done enough school where I'm like, I just don't want to think about it anymore. And don't make me do it. Oh, don't make me do it. So anyways, yeah. So when things are bad, the US dollar gets strong, and demand goes up. Typically what happens is when things are good, you want to consume more stuff. It just happens to be the dynamics of the reserve currency and the size of the U.S. economy, and that those dynamics creating an import economy versus an export economy. It just flips things around from logic. So typically, when the U.S. economy is good, the dollar is weak. But the U.S. economy impacts the global economy like no other economy. There's no economy like our economy, like no economy I know. Okay? So when things are good, Americans just buy a lot of stuff globally. And when you import stuff, you export your currency. The supply of the currency globally goes up and that weakens. But when things go bad, not only do Americans bring their money back home, but for other dynamics, foreigners buy U.S. treasuries. So Americans bring their money home, but then foreigners start buying up dollars to buy treasuries, and that creates, right? So that's sort of like why I'm thinking of a Geffen. When things are bad, the prices go up. And it's kind of opposite of what you think. And then as the value of the dollar gets strong, people want to buy more. And all that kind of stuff. So, whatever. Yeah. Okay. All right. I'm tired now. So there you go. Now, if you're a bear on this, what should we do? Well, I mean, I'm assuming you've done all your lines, right? You got to do all your lines. So that's I kind of feel like we're going to stay stuck in this mud. And then the next line is here, and the next line is here. And who's going to win the Brexit negotiation? Nobody. Aisha says, when the stock market goes up, the dollar weakens. Well, that's a different question. So the question you should be asking is, who's buying the stock market? If Americans are buying the stock market, nothing happens to the dollar whatsoever. If foreigners are buying the stock market, then they're buying dollars first to buy the stock market, and then dollar gets strong. But that's the opposite of what we're talking about. So really, the amount of stock bought and sold every single day is irrelevant to the value of the dollar. So the Forex market is $5 trillion a day. What's the daily turnover for the S&P 500? They have it contracts, but not dollars. Does anybody know? Maybe just daily turnover this time. Because stock market is so general, right? Oh, turnover versus volume. Well, that would be number of calculations. I want the dollar value. They define it, but they don't give me a number. Does anybody know? It's nothing compared to Forex, right? So if foreigners were the only people buying the S&P 500 or the stock market or whatever you want to call it, the actual stock, relative to $5 trillion, it's not enough. So what's more important is the behavioral finance behind what's happening. So if the stock market is going up, Americans feel rich because their retirement account is going up. Okay? And the household effect and all that kind of stuff. So when that happens, then Americans feel like they can consume. So the household wealth effect created by the stock market going up leads consumers to consume. And when consumers buy stuff, in particular anything, it's probably not made in America. Which means anytime you go to Home Depot or anytime you go to Walmart or anytime you go anywhere, you're buying stuff that was probably made in another country. And so every time an American buys something, inadvertently or indirectly, they are lowering the value of the dollar. Okay? Okay, yeah. That's nothing, right, Jim? Jeff Bezos makes more than that in a day. Okay? So that's what we need. So the stock market is indirect. Another thing to remind yourself is the only time a currency changes value is when a currency crosses a border. So don't think like, oh, if the stock market goes up, something happens to the currency. No, not necessarily. Why does money cross a border? That's the question. Always think about that. Don't get caught up in anything else. Money has to cross a border. Okay, we'll do a couple of exotics and then we'll call it a day. Okay. We'll do a follow-up here. This is what is in the conversation, and we're caught up on our line. So, not good, not bad, disconcerting though. But you have to remind yourself, is that your plan or not your plan? So nothing's changed, but it ain't working. So it doesn't feel comfortable, but that's that. Okay. Peso right now is still the perfect trade. That's exactly the price we wanted. I missed it. I had a trade after the drop at 22.22222, and I missed it because it came up to 22.10 or something. Okay. So anyways, what price does that predict? Easy. Let me tell you that. La 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 la, 20.5. Here's the current trade plan. Ready? Okay. Okay. Got it? So now you have to weekly swing or day trade along with this. The weekly swing, you're out of position, so you're supposed to be on a 4-hour chart. Okay? So for anyone that's gone through my swing trading course, you can see exactly what you were supposed to do, and you're like, oh, it's working. Sweet. So you already know the outcome. We should be here soon. And then we should be worried about next week into the end of the month. Okay? So, right, so here's the OOP trade. And then we need probably this. And then out. You got it? Straight out of the training course. It should be crystal clear. Oh, could you hold it? Well, yeah. But see, this isn't necessarily a fundamental trade. Now, it kind of can be, but it isn't necessarily. This trade is a flow trade. And so it doesn't predict anything except enter and exit. Okay? It's the remittance flow. Now, if you're trading it fundamentally, could you hold it longer? Well, you're right. I said if Biden wins, the dollar will weaken. If Trump wins, the dollar will weaken more. So you could try to jam your stop and just hope that works. And you're kind of like gambling with opportunity cost. If you're already making money, just jam your stop. Now it's not real money. You can't lose money. You could get out money now, but maybe this is long. And it could work out and it becomes a decent carry trade. The other thing behind that is the U.S. economy improving would weaken the U.S. dollar. Consumer confidence and an improvement in the job market would weaken the dollar. Oil prices going up would improve the value of the Mexican peso. The U.S. economy improving would also indicate more foreign direct investment and jobs in Mexico as well, which would improve the value of the Mexican peso. So yeah, you could put it all together, okay? But I'm just talking technical analysis. So out just means this predicted that. Okay, that's just technical analysis. This simply predicts that. It doesn't do anything else. Now you need to say, well, I'm well on my way on my fundamental trade, but none of those fundamentals exist on a chart. So you have to make that decision first, and then make the risk management issue of, okay, you traded this. You've moved your stop to break even, and now you're going to let it run till the first of the year. Okay? Radon has to do a shot of tequila. All right, so there's ZAR. You can do some ZAR here. Yeah, the follow-on trade is here. Okay, here's your sell. This is a tough one, but you have to stick to your plan if you got a plan. Or you can see there's still a positive slope, so you might be a little nervous about this one. Okay. So you might want to wait for tomorrow and see if you have a negative rise over a run. But tomorrow's trade plan is selling here, by the way. Do you see it? Sometimes I'm not sure if you see it. So that's why when I say things, I have to double check and make sure you. Okay. If you're a bear, that's tomorrow's trade plan, which you probably are trying to do now. If you wait till tomorrow, we'll probably be down here by the time you figure it out. Okay? You see it? Today is already done. So if you're a day trader, you're making tomorrow's trade already. You may already be in it. Oops. Delete. Okay. This is tomorrow's trade. Okay, today is done. Was today's trade. You should have sold up there. So now you sold here, and you're already done tomorrow. You can still do it here if that's what you want, but it's not today's trade, it's tomorrow's trade. So if you log into today, and this is where I always just chuckle. When people log in, they're like, what's up, fellas? What are we doing today? You're like, you're going to lose money. You should never be focused on today. Today's done. Today's dead. You did that was so 18 hours ago. So you're already done tomorrow. Okay? You see that? And if you don't do it, it's because you don't like the market conditions. Good. Wait for them to change. Okay? I'm not saying you should do this. I'm saying I prefer if we're sloped like that. But can you sell this lower high on off this price? Yes, you could. But you're on the first wave. It's closer to a bet than anything, but like I said, often it works. Okay? Now, if we get this tomorrow, the slope will be like that tomorrow. Cool, right? So less than half of people watching the video right now have clicked the thumbs up button, click the liked button. How come? 50% of people watching in the moment have not clicked like. Would you please do that? Look at this. You've already saw. It's Oscar Mike. So we now have 80 out of 130. 82. 85. Out of 128, 86. So anyways, I uploaded a video called How to Tiptoe into a New Forex Trade, Scalping into a Swing Trade. And that is available to you here. Compliments of the firm. Okay. Very cool. 90 out of 127. 91. You seen it already? I just made it, Emmanuel. You already? That's crazy. Very cool, though, huh? Yeah. Well, thank you for being part of my team. Thank you for being part of this community. Thank you for all the hard work you put in and the professionalism that you exude. And today is a Wednesday. Remember, you have homework today. FOMC meeting minutes. And tomorrow I will be here. Tomorrow is a Thursday, which means my live swing trading group will meet in the afternoon to plan out next week's trades. So once again, if you're interested in joining my swing trading group, you visit fxbootcamp.com, sign up for the training courses at 80% discount, and then take the one-time offer to join the swing trading group. There used to be a sign-up fee that's been waived, so it's cheap. So anyways, peace on earth, may the pips be with you, may our profits be above average, and I will see you tomorrow. Thank you to Traders Way as well, huh?